Digital Asset Summit in New York is right around the corner. Some of the biggest names in crypto and several major institutions are going to be there. There's a lot of noise in crypto right now, and I think this conference will be pretty high signal. We're doing a live Lightspeed taping with Solana's co-founder Anatoly and Kyle from early Solana investor Multicoin Capital, so you won't want to miss that either. I hope to see you all there, and you can use the code Lightspeed10 for 10% off tickets at checkout. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek. We're joined today by Ben Leventhal from Blackbird and Jesse Walden from Blackbird Investor Variant Fund. Ben, Jesse, thanks for coming on the show.
Thanks for having me.
Likewise.
So, obviously we are a Solana-centric podcast. Blackbird is built on Base. And I think these conversations are really helpful because we can become a little bit of an echo chamber, and it's fun to just chat with builders and other ecosystems and get a little bit of a broader perspective. I'm also excited for this episode because I am personally a Blackbird user. I purchased a $60 Breakfast Club pass like a year ago that has gotten me free coffee at some places in New York City all year, which if you've ever bought coffee in New York City, that was a very good investment to make. So big fan of Blackbird. I think a lot of our listeners may not be familiar just because it is a Base project and we are, again, like a Solana podcast. So let's just start really simple. Ben, what is Blackbird? What is Flynet, which was just announced today? What is the F2 token and how is it all going to fit together?
So Jack, Blackbird is a loyalty and payments company for the restaurant industry. We do a couple of things, all of which are around making restaurants more economically sustainable and independent and creating connectivity between restaurants and their customers. So as a consumer user of Blackbird, you use Blackbird to check into restaurants, to earn points at those restaurants, and then to pay your check at those restaurants. You can pay using any form of payment you like. We prefer that you pay with Fly, which is our native points token, rewards token. But we are agnostic today in terms of how you pay. So Blackbird is built, as you said, not on Solana, but on Base. And today we're excited to announce that Flynet, our own chain, is live. What that all means is that anything that happens on Blackbird, any transaction, any check-in, any action that either a restaurant or a consumer takes is now being memorialized on chain on Flynet. This is a huge deal in the long run. As with lots of things, I think crypto, I think it's fair to say that the promise of what it is to be is what's the most exciting about it. But in practical terms today, as I said, everything that's happening now on Blackbird is live on our mainnet. And I think what we're going to start to see is the transparency of this activity and the fact that we can execute all of these things that traditionally have required third parties, some of which were not economically aligned with restaurants. The fact that we can do all of this on our own chain, independent of those legacy entities, is going to massively change the game for restaurants.
And there's a lot to dig into there, but I think to just go a little deeper, one thing to say about Ben, you were the former co-founder of Resy, which is a really popular, restaurant reservation app, deep roots in the restaurant industry. And something that, as I've followed Blackbird, you tend to emphasize a lot is that this type of loyalty platform is needed to essentially cut out middlemen from the restaurant industry. And so I'm just curious to actually hear from you, what are those middlemen and intermediaries in the restaurant industry and why do they need to be cut out?
Yeah, so, I think the most important thing to note as framing here is that restaurants are $1 trillion in size when you look at aggregate in the US sales, right? That's a pretty sizable industry. And from my perspective, I think at that size where you'd expect the scale to start to benefit the individual players of the industry and for it to be healthy for the average industry player. So the really interesting thing about restaurants and the real crux of the opportunity for us in many ways is that most restaurants are not particularly profitable. And if you look at profitability over a period of time, it's declining, which is pretty confounding given that restaurants just get more and more popular. Restaurants are hardwired into our lives as consumers in a way that I think 20, 30 years ago they weren't. Like, we spend our time in restaurants. I'm obsessed with restaurants, but so is everyone else. And I'm sort of have luckily turned this into a career. But given where restaurants sit in our lives, in popular culture, it's, to me, outrageous and unacceptable that profitability is so poor. So a lot of that is due to how restaurant economics are set up and how many third parties do sit between restaurants and their guests, or between restaurants and their purveyors, or between restaurants and their cash. And when we say we want to cut out the middleman, what we're really saying is, there's somewhere between 3 and 5% of a restaurant's top line revenue that's leaking out to third parties that, in my opinion, are not creating enough value. So we really want to focus on that. We want to focus on the fact that if you're sitting in a restaurant or you're ordering a cup of coffee, it absolutely should not cost 3.5% for the restaurant to collect payment from you. And if you go to a coffee shop every day and you are paying with a credit card or something else, the idea that those companies are essentially standing in the middle of the relationship between you and that coffee shop or you and that restaurant, and in many ways are brokering your information back to the restaurant over and over again, we think it's unacceptable. And so, really those two things, the issue of cost and the issue of this leakage of value out of the industry, and this very much related concept of connectivity between consumers and their guests, those are the core things that we're really battling on.
Yeah, absolutely. Something that I think a lot of Solana people are pretty obsessed with too is this idea that credit card companies are quite extractive. The fees are very high. And I think it's a very difficult monopoly to crack, especially when you look at how intertwined the credit card industry is with things like airlines, other kind of point reward systems, which I'd love to get into a little bit later as well. But Jesse, I want to bring you into the conversation because Variant is, a crypto native fund. You've invested in a lot of, say, more DeFi, internet world plays, but this is really a consumer real world app. So why did you think that Blackbird was like the right format to kind of make crypto and people's real world restaurant lives intersect?
Yeah, so I would say, the founding thesis for Variant is make 1 billion users owners. That's sort of fundamentally the opportunity that we see in crypto. And Bitcoin, Ethereum were the first to do this. Bitcoin made it possible to own a digital asset on the internet, and Ethereum evolved it to be programmable, and now we're in a world of many chains. And if you look at who's benefited from that, people early to Solana, people early to Ethereum, largely developers, right? And developers own the network on top of which they're building, which makes a ton of sense. But our view is that same idea has the potential to kind of cross the chasm to every internet user. And that's what we mean by the idea that we want to make billions of users owners. And so, we're going to get into this more, I'm sure, but Ben's been touching on it, cut out the middleman. How do you do that? Was by making the stakeholders in the industry that Blackbird's focused on owners of the underlying network. And that's, I think the news today with Flynet's launch. So yeah, that's it's like the bullseye of our thesis. And yeah, we invest full stack in developer infrastructure and DeFi, but we think this technology has a huge role to play in consumer, and Blackbird is probably the best example of that going right now.
Yeah, I'm interested, Ben, and I guess Jesse. I saw the news today that you had built a layer 3 on top of Base rather than just as, say, like an app on top of Base. So why build a whole blockchain for Blackbird? What was the decision there?
Why go through the trouble? Look, I think we strongly believe in the long run it's the right construct. We believe that things like governance, things like ownership, things like having our own native gas token over which the network will have full control, those things are going to matter a ton. We're going up against, as we've discussed, legacy industries and entities where control has been massively imbalanced. So as we think about what is required here and what is ultimately the best version of this, we think it's our own chain. Time will tell whether this is us overbuilding or this is us having a good view into the future. But that's how we think about it. We want to maximize control for our users, ultimately ownership for our users, and ultimately governance for our users so that they can design the mechanics of the system however they see fit.
Did you start out knowing that this was going to be a blockchain project built on Base, or were you kind of interested in blockchain tech and then along the way decided let's do this layer 3 thing on top of Base?
No, it's just definitely been an evolution of strategy. And even picking Base was a conversation, and our thinking there evolved to the point where we picked it. Anyone who says that they have sort of a full understanding of how blockchain tech and how this ecosystem is going to develop is maybe lying to themselves, if not the universe. It's all happening in real time, and it's both exciting and challenging to play in that kind of environment. But certainly, as to the question of an L3 and of Base, absolutely, it's happening for us and evolving for us in real time as the technology evolves, as the ecosystem evolves, as our shared understanding of best practice evolves. There's a humongous number of things that still need to be figured out for all of this to work. But we're taking it as it comes and hopefully making good decisions as we go.
Yeah, Ben, I think one thing that's kind of important to note around this point is that, for folks who haven't used the Blackbird app, I would encourage you to install it and try it out, because what you'll find is there's really no trace of it being a crypto app, right? And so the underlying blockchain is not legible or visible to the end user, and so I think that's important because, I think there's a whole other class of applications that are more, crypto native, right? Things like, there's things that are launching tokens like, meme coins and things like that. For which, the chain is part of the experience. It's like, you have your wallet, you're constantly trading. And so you're constantly tapping into your Phantom wallet. That there's a whole class of crypto native applications. Blackbird's not really in that class. Crypto is completely abstracted. And so I think for that class of application, all the friction that would come from getting a crypto native user to your own chain is not really there for Blackbird, right? The user is coming in directly to this chain, basically, and doesn't have to think about what chain they're on at all. So I think that makes it a little bit easier to optimize for the things Ben was just describing.
Now for a quick word from today's sponsor. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible. Yeah, I've always thought that was a cool aspect of Base is of Blackbird is the way that you open the app and nowhere do you see crypto, because I think the crypto world can be very navel gazy and sort of just the Ouroboros image that Vitalik likes to talk about. I think can be true, but Blackbird is you can't tell that it's crypto anywhere, except I guess you have these fly points and which will become a token.
Yeah, look, my career has been in building stuff for consumers, so I sort of come at this with all the rules intact. Consumer products have to be magical, and consumer products need to do the thing they say they're going to do for consumers. And as we're talking about, I just don't think that blockchain is a consumer technology. I think it's infrastructure. And so we've certainly built with that in mind. I do think, for what it's worth, I mean, especially on the Solana side, there are cool applications that are much more crypto first. And I think it's kind of interesting, things like Yapster, like it's kind of interesting to see how there is starting to be like a real native kind of crypto consumer kind of interface, if you will, that's sort of being defined. Some of it's graphic, obviously, some of it's functionality based, some of it's sort of rules and ethos based. But I think we're seeing some of the crypto come more to the front in a much more sophisticated and thoughtful way than we have in the past. But certainly for Blackbird, we know that restaurants and that restaurant connectivity is where we have to deliver magic. And I think it's fair to say that we'll continue to put the blockchain sort of behind that in terms of what consumers see.
Yeah, framing I like on this point is like crypto wants to be seen versus crypto is in the background. And those are the two classes of applications I was talking about before. And yeah, I think I used to be a really firm believer that crypto wants to be seen. And this was like, NFTs and the fact that NFTs are on the blockchain, like you need to know that to value them, right? Like I used to really strongly believe that. And I still do. I think for a certain class of applications, that's really important. And I think increasingly, to your point, Ben, like that's going to continue to grow. And so what that means in practice is that, consumers and mainstream culture is going to move more towards crypto natives. But I think it's also true that to enable that, like, we have to meet consumers where they are today. And so like Blackbird is getting wallets in all these people's hands without them even realizing it. And then, you have this functionality going on under the hood, like you'll be able to stake F2, right? Like things like that, like F2, the native token. So it's kind of like a Trojan horse where it's like Steve Jobs said, like your thumbs will learn, right? Like you get people on board with this technology without them even realizing it. But over time, you can kind of teach them new behaviors that move them more towards the sort of crypto native or crypto wants to be seen version of the world. And I think we badly need more of that because the version of crypto that has been seen by most mainstream consumers to date has been like extremely up and down and like kind of nauseating for a lot of people. So we need both these things to kind of meet in a happy middle.
Yeah. I think whether or not crypto wants to be seen is pretty price of Bitcoin dependent. So lately a little less it wants to. I'm curious to chat, Ben, about this native token. I think so. I was an early Blackbird user, and you would get these fly points that it looked like you could spend on like stuff at restaurants. And just from like a couple people I talked to who are also users, it felt like it might just stay at that. Like you go to these restaurants, you get these like native reward points, and then you can spend them on stuff similarly to I don't know, your credit card points. You can buy flights or like things on Amazon. But now there's this native token. So I'm just curious to get more details. Like, is it going to trade on crypto exchanges? Will it like be pegged to any price, or is it just, trade like a regular crypto token? And if so, what was the thinking behind sort of putting that out there?
Yeah, we initially started by believing that Blackbird would have one token, and that token would sort of be this, I guess, a hybrid on-chain, off-chain token where you could use it as spending currency in restaurants, and also it would have some of the sort of characteristics of traditional blockchain tokens, where it might be gas and governance or other things more sort of in the blockchain universe. And I think it's fair to say that as our understanding, frankly, of Blackbird has evolved, we see Blackbird as being essentially two kind of universes that sit to some extent on top of each other. One is Blackbird, the loyalty company and the consumer application, and the other is Blackbird, the payments network, which is Flynet. And although they are very, very closely related and at times feel like that they are hardwired together, they are very different in terms of ultimately how value might accrue, how the platform strategy might evolve, and ultimately sort of how they each will prioritize their end users. So we sort of at some point in the last 24 months realized, with Jesse's help and with other smart people around the table, we realized that we sort of had to figure out a way to bifurcate the behaviors that we wanted with Fly and the behaviors that we wanted to evolve to with the network, with Flynet. And so that's sort of how we got to where we are, and how these two things, I think, will continue to coexist. Fly is going to be, your points to spend on Blackbird, and maybe someday in lots of other contexts, we hope. Flynet and its token F2 is really about governance and control of the network itself. And we do strongly believe those things have to be separate. When you earn points in a restaurant, the thing that make them magical, in my view, is two things. One is you feel like there's really good value accrual. And two is you can spend them like you could anything else. When you walk into a restaurant and you've got a Fly balance and your meal's covered, or you walk into a restaurant and it could be coffee or it could be a bottle of wine that you wouldn't otherwise splurge on, the fact that you can do that right at bill payment, to me, means a lot. I spend a lot of my time in restaurants. And so the idea that we can bring points as spending power that close to the restaurant experience, that's awesome. And that's really where we have to continue to focus on in terms of delivering value and magic with Fly. As we've been saying, the network is a whole other animal, and how that evolves and what that looks like 1, 5, 10 years from now, it's going to be different. And so we really think by bifurcating these things now, by saying there's Fly and there's F2, we will have sort of maximized both the value and the magic on both sides.
So you spoke a bit to the value accrual on the Fly points side. What's the value accrual on Flynet?
Well, I think the Flynet value accrual is evolving, but where we're starting with it is as follows. One is, obviously, if you've been using Blackbird, you get F2. So I don't know if you'd call that necessarily value accrual, but we've said from the start, if you're a participant on Blackbird and you're with us early, you should benefit in the long run from what we're doing. So every person who has interacted with Blackbird in any way is getting a share of F2 tokens. The network is doing one thing out of the gate where we think there's going to be massive value accrual. And I think this is not where we end. I think this is an example of how this can evolve. Every time a transaction is processed on Flynet, the network takes a 25 Fly clip. Okay. And those 25 Fly clips obviously will sit in a treasury and will add up. And we will redistribute that Fly to holders of F2. So if in a restaurant only context you want to think about this, and again, we are restaurant only today, but we will evolve past that over time. If you're holding F2, you could meaningfully expect on an annual basis, there's essentially a Fly dividend for you on the basis of your holding F2. So if you're spending any meaningful amount of money in restaurants on an annual basis at all, that's a huge win for you.
One mental model that I like to use, Ben, I'm curious if you'd agree with this, is like for crypto natives, like a simple way to think about Fly, maybe like it's kind of a stable coin. I mean, it's really points, but they're worth dollars, right? Because you can literally go and use them to buy a coffee, and the coffee has a dollar value. And so there's things in the Blackbird network, whether it's coffee or dessert or whatever drink at a bar, that you can consume with Fly. And all those things, like if you weren't using Fly, you'd be using dollars, right? So there's a real dollar value on the Fly points. And so when you talk about like transacting, like the value of F2 comes from payments that happen in the network. The first type of payments that are happening and it's growing today are Fly transactions, right? The rewards program payments. But that's a really nice wedge in to all the other payments that have to get done, right? Because you're not going to only use Fly, probably, just like you don't typically only use like your airline miles to buy tickets. You also often are paying dollars to on top of the points that you've got. So I kind of think of Fly as, it's basically a stable coin. But you're just abstracting the dollars. It's a points program worth dollars, and that's a great wedge in for the payments network that you're looking to build.
100%.
One other thing that I think is really cool about Blackbird is so there's a hardware component too, which we haven't talked about. And so actually, Ben, you do a better job of talking about it, but like you're physically going to these locations and you have these places you can tap your phone and check in. What's the idea there?
Well, the tap in is a digital handshake between the restaurant and the consumer. And I think it's fair to say that the form factor of the tap will evolve for us. Right now, it's an NFC chip. And so as a consumer, you walk into a restaurant, you tap the chip. We now have a reliable signal that you're in the restaurant, and we share your information with the restaurant. So you've essentially checked yourself into that restaurant. And you're doing a couple things there. One is, as I said, it's a digital handshake. Two is the restaurant, by virtue of that tap in, is getting access to your spending wallet. And we can then use that on the restaurant's behalf to allow you to pay. So, over time, as I said, that's going to evolve. But we have this NFC chip, which is we have this digital handshake component, and then we have our own system, which sits next to the point of sale system that allows restaurants to process transactions. Those two things we think in chorus are incredibly powerful here, and ultimately are why this is all going to work and why it works better than a lot of the legacy systems. A, we have full control over, and B, as I said, it's sort of creating this very, very important and real-time connection between the consumer and the restaurant.
And one of the ways it shows up practically, which I think is very cool, is like you like when you go and check in at a restaurant, and you sit down for your table, the way you pay your bill is totally different than a typical checkout experience, right? It's like they know you're there, and they can push to your phone. They can push the bill to your phone, and then you can choose. Do I want to use my Fly points? Do I want to pay with a credit card? So effectively, you're like wedging into the point of sale system by virtue of this loyalty rewards. I don't know if I've said too much.
Better you say it than me.
Ben, it's been, I believe, about a year of Blackbird launching now. I'm just curious to hear some of the learnings from year one. So it's a restaurant loyalty platform. These, little hockey puck NFT things are at a number of restaurants now. You'll see them in New York.
Yep.
I'm curious, just how have things played out this year? Maybe the same or differently from how you would have imagined, and what kinds of restaurants really benefited or just like Blackbird the most in your view?
So we worked with lots of different kinds of restaurants. We've got about 500 live now. Everything from coffee shops to proper fine dining restaurants. When we started, we initially believed that we would build this platform where restaurants could be extremely bespoke about what loyalty meant. And so if you wanted to sort of set up a program where, you had a sort of access program for VIPs, and first time customers got a dessert on the house, and when you visited the third time, you got, free drink. That's how the platform is built. So we can support highly bespoke loyalty design. And I think, frankly, more than anything else, what we realized and what we've learned is that restaurants they don't have the resources and they don't have the muscle to do that. And what we've evolved to is a much more standardized version of what loyalty looks like. There's a much stronger emphasis on Fly today than there was 12 months ago. And there's much less, although not zero, because some restaurants believe in this, and the restaurants that are good at it are really good at it. But there's a lot less of that, I would say, programmatic gifting. And I think that's probably more than anything else, the thing that we've learned. We have to be a little bit more prescriptive than we thought with restaurants. And at the end of the day, alongside that, customers, more or less, they care about points and value, and sort of, being recognized for actions. And they care about being recognized and alongside that, access. And those, more than anything else, are the levers. And I suppose we could have figured that out, beforehand. But we built a lot of things that we were really excited about, frankly, in terms of what they could unlock for the restaurants in terms of customization. And we'll see how it continues to evolve. We'll see how, as loyalty overall sort of develops more and more in the ecosystem, things happen. But I think that, more than anything else, was probably the thing we did. We over-indexed on a little too much in the early days.
Yeah. It was interesting. I was thinking today, preparing for this episode, like there's kind of very little in crypto that can credibly be said to be working with small businesses. Like crypto startups themselves aren't really small businesses. There isn't a lot of like manufacturing or things like that in the crypto space. But I really do think Blackbird, I would think, primarily works with small businesses, because you're not like helping Dunkin' Donuts do loyalty points. It's these, local coffee shops, one-off restaurants in the city, things like that have a huge discoverability problem, especially in New York. Like your competitor getting one viral TikTok away from having no business anymore. So it's interesting that you fill a unique niche in that way as well.
I'm really glad that you brought that up and framed it in that way. I certainly agree. And it's something that we talk about with restaurants all the time. And a big part of the problem, actually, the challenge of what the future looks like for restaurants, because, Dunkin', Starbucks, Sweetgreen, Chipotle, these companies have high-powered loyalty offerings. And so at the end of the day, as an independent restaurant, whether you like it or not, you're competing with those companies for your customers. And so in many ways, we do think about Blackbird as being the tool set and the resource that independents have to fight that fight.
Now for a quick word from today's sponsors. Today's episode is brought to you by TurboTax Calculator. Accurate crypto taxes, no guesswork. Get accurate CPA-endorsed tax reports with full support for IRS rules. With more than 3,000 integrations, TurboTax Calculator supports all of your wallets, exchanges, and Onchain activity. And you can import directly to TurboTax or H&R Block, or share securely with your accountant. You can use our exclusive discount code BW2025 to enjoy 30% off all paid TurboTax Calculator plans. That's BW2025 for 30% off. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible. Speaking of some of the, larger incumbents, I wanted to dive a little bit into just like the broader context here, because over the years, there's been a number of attempts to put customer loyalty on chain, because it sort of makes intuitive sense. We use all of these Dunkin' points and Amex points all the time. They're just kind of valueless off-chain things. There's maybe benefits to putting them on chain, but it feels like one by one, they've all fallen by the wayside. I think the most recent to my mind would be like Starbucks had an NFT program that it kind of gave up on, I think, last summer. So maybe just talk through, to the research you've done, why have those projects failed, and what are you doing differently to make it end differently?
I mean, look, I'm not necessarily qualified to say why or why not Starbucks didn't, get the Odyssey thing right. I would say the way we think about this is it has to work, and it has to be magical at face value. Like, nobody is going to engage with Blackbird because it's on chain. The idea that the Starbucks Odyssey program was on chain and that was a draw, it turns out that was a sort of absurd assumption. And we just have a really sober view about this. I think it may work because we think largely it's going to be really hard to make it work. And we want the value to be about what you can get at restaurants and how those points make you feel from like spending power and unlocking magic standpoint. Again, it's just real world value. I think that's what we have in terms of what we can deliver, and I think that's what we're going to continue to focus on. I think the other thing that's important about Blackbird's approach, at least how we think about it, is we are moving incrementally, and we're moving, I think, blockchain last. And I do think those things matter. And again, we're probably starting to say the same thing over and over again, which is that it's about, real world value and delivering great consumer product. But I think we take just a really sober view as to how, as to making sure that doing things on chain for being on chain's sake don't get in our way.
But I think that's all true. But one thing that I think you're underselling yourself on here is that what Blackbird is doing that I think is part of its success story so far is like, it just happened today, but it's been part of the story from the beginning, is that the users of the network are going to own the network. And that was not the case for the Starbucks loyalty program. Yeah, you got an NFT and you own the NFT, but like the NFT was a loyalty program. That's very different than owning the underlying network on which these transactions are happening, right? And so, like, when you talk about Blackbird users, there are two types. There's consumers and restaurants and vendors, right? Today it's restaurants and soon to be other types of vendors. And they all just got some of the network today, right? And so that's a really big difference from a lot of the other stuff that's been tried on chain. And then again, to Ben's point, like this is happening on the back of building up a product that people want. And like one of the things I'm, probably at risk of beating a dead horse on is like progressive decentralization, right? Like you first need to build a product that people want. Blackbird's done that. It's working, right? And now like you're gassing it basically by giving users real ownership in the underlying network itself, which is like something that they intuitively understand the value of as users of the product, right? And so they don't need to know or care that it's crypto or blockchain, but they do get like, I think intrinsically understand, I get to own a piece of this really valuable product that I use every day. And that's a big deal and a big difference from prior programs.
Jesse, are there other, say, customer loyalty plays in crypto that you're interested in or have been intrigued by?
That's a good question. I mean, I can't think of anything that's like, as normie focused as Blackbird and as successfully normie focused as Blackbird. There's definitely been, I think, loyalty programs that are crypto native that have been interesting. Like Hyperliquid, I think, did a great job with their rollout. But that's a very crypto native audience and crypto native program. And there's many other examples that are crypto native, but I struggle to think of anybody who's like kind of successfully crossed the chasm in this way of getting like normal consumers excited about an on-chain loyalty program.
I guess I'll just ask, like, what makes a good airdrop? Because this has been on my mind recently with Kaido, just happened.
Yeah.
Magically, their token has gone up a lot. I don't know what kind of market making they're doing, but it feels like a lot of the time airdrops end in, weeping and gnashing of teeth. So just with your involvement, like how do these things actually go well?
Yeah, that's a great question. Something we've been thinking a lot about. I think like number one, in my view, and Blackbird's doing this as well. I think like probably the most important ingredient to airdrop success is really carefully targeting who the recipients are. And I will say, like, the industry's been a little bit hands tied on this for a while because in order to be sufficiently decentralized, many projects have had to kind of optimize for a one and done airdrop. So kind of one big retroactive airdrop. And when you're setting up something like that, you're almost asking to be farmed. Uniswap had this this great advantage in that they were kind of the first to do this big one of the first to do this big retroactive airdrop. And so no one was expecting it. And therefore it wasn't heavily farmed. And I think they successfully got a lot of tokens out to real users, back in 2020. But ever since then, it's been, incrementally harder and harder because any retroactive thing just gets farmed to all hell with like, professional farmers who are not the folks that you want to give your tokens to, because inherently they are just going to dump and on the heads of your real users. And so what you want to figure out, how do we target real users? And one way, I think there's a couple like methods that I've seen be effective here. One, which Blackbird is doing, is seasons, right? You want to have tokens slowly drip out over multiple epochs, so that you can reward your most active users over time. And one of the things that you can do if it's happening over time is you can see who's been consistently active for long periods of time. And that's just one blocker for farmers, is like they have an opportunity cost of staying engaged over a long period of time. So that's one bit of low hanging fruit. Another, we were the seed investors in Morpho, which is a lending protocol on Ethereum. And one thing they did that I really liked is they had liquidity mining, where you could earn tokens for being a liquidity provider to their marketplace. But the tokens that you earned while they were on chain, they were non-transferable for about 2 years. And so that, that's pretty common in Silicon Valley. If you're working in a company earning stock options, they're subject to vesting. And locking the tokens self-selects for participants who want to earn those tokens, but are also long-term oriented. And again, there's an opportunity cost there. So that, I think, also self-selected for folks who believed in the protocol long-term. There was one case actually where I forget their handle, but this guy is known as one of the biggest mercenary airdrop farmers. And he like publicly tweets about, or they publicly tweet about what they're farming. And they tweeted about Morpho and, this 2-year lockup and the fact they couldn't sell the tokens. They kind of got pilled on the project and became long-term. And so that to me was some evidence that just putting a lockup just self-selects for real users who care about the project. So I think those are two things projects can do to make airdrops more successful. And then one last thing, and then I'll shut up, is, I think I just talked about having seasons. I think you also have to balance having an appropriate float in the market too. And those things can be intentional. Yeah. You don't want to start with so little float in the market that anyone trading the token has big impact on the price. But on the other hand, you want to really target to your user base. And I guess the one mitigant to this is making sure you have a big enough user base that's high quality at the time you do your airdrop to get a sufficient number of tokens in the float. And that implies progressively decentralizing and doing this once you have real product market fit.
It also implies just having a product that is good and that people want to use, which is not always the case.
Yeah, and that people not only want to use, but want to own, right?
Yes.
Which I think is downstream of using it.
Yeah. Okay, to put a bow on the customer loyalty history conversation, Ben, one other thing I was just curious about is you come from a more traditional tech, say Web 2 background. Do you get the sense that there is appetite among other Web 2 folks to do this type of thing? Specifically with customer loyalty on chain, do you get the sense that some of these chains have any interest in doing blockchain stuff?
You mean the
excuse me, food chains, not
food
chains. Yeah.
I get the sense that there's a lack of understanding about the opportunity, and I get the sense that there is certainly, thanks to the regulatory environment of the last several years, a lot of fatigue around execution and around what might or might not be worth it. I think to a lesser extent, companies that are not technology first companies, food chains among them, their approach to technology and to certainly cutting edge stuff, it tends to be, short lived, and they'll just kind of move on to the next. So I think it's probably fair to assume that a lot of large chains are thinking more about AI now than they are about blockchain. And they were thinking about blockchain 5 years ago. Some of that interest has waned. I think we'll have to see what happens next. I think that as Blackbird and other companies prove out some of the use cases and show show how this stuff scales, will come back around. I mean, there's absolutely no question that as Blackbird executes, big large chains that themselves are responsible for hundreds of millions of dollars of TPV are going to look at some of the things we're doing and say, well, that's interesting. There could be real savings there for us, or there could be real upside for us in terms of loyalty. But I think we're going to have to be patient. I think what happens next from a regulatory standpoint matters a ton. I think the success of the projects that are in flight now matters a ton. And if we can figure those things out, there'll be lots and lots of versions of Blackbird all over the world.
How did you get interested in crypto while we're speaking of this?
I can blame Fred Wilson for that more than anyone else. Fred is somebody I've been lucky enough to know for a very long time. And actually, we first met when he and his wife invested in Eater more than 20 years ago. But obviously, his writing on blockchain has been well ahead of the curve for quite a while now. And by virtue of knowing him, we've had lots of conversations. And so he's not the only reason why we're here, but he was pretty impactful to me early on and really pushed me to think about how restaurants and blockchain could come together. And, it was some early conversations between us and some other folks that started to get me galvanized around what Blackbird is.
Incidentally, and I don't know if you know this, but it's kind of the same story for me and crypto. Not Fred specifically, but I was, before I knew many people in tech, I was a reader of the USV blog, and I think it was like in 2013 or 14, they had this blog post about dark web marketplaces. They were talking about like the Silk Road, and one of them will get shut down by the FBI, and the next day a new one pops up, and all the sellers, all the drugs, all the are there. And everything's intact because it's all tied, it was all tied to their public key, and they could prove they were the same seller with the same drugs and the same reputation. And that resonated with me, that blog post, because I'd been thinking about a very similar idea for media. Like, what if every creator of a piece of media on the internet could prove that that they were the creator by virtue of the key that signed the media? And that was that I got in the comments and said that, and that got me a meeting with the USV team, and that was the beginning of my crypto journey, because I was doing a startup called Media Chain, and they invested in it. So anyway, we both have USV to thank for being here. It sounds like.
I love that.
Yeah, that's funny. That's a random connection. Glad you didn't end up building, Silk Road itself. That's the direction I thought we were going. But Ben, one other thing is, you have spoken several times about building magical experiences for users. I think there's a lot of founders that listen to this show. So how do you think about building magical experiences, and maybe what do you think crypto can do better on that front?
Well, I think, to me, when I say magic, I mean extremely low friction, extremely thoughtful. We had a rule when we were building Resi. The first rule that we put in place in terms of the product was you had to have a reservation in 2 taps or less. That, to me, is sort of a practical example of how magic works. With Blackbird, you tap in with the puck, you have your phone in your hand for 10 seconds, and then your bill's paid. That feels magical to me. I think generally with crypto, we are falling way short of magic. But we're quickly making up ground. We use Privy to spin up our wallets behind the scenes, and that's helping us deliver magic in a big way, because, we have more than 100,000 wallets behind our users, and not a single one of those people have had to do anything to get those wallets in the onboarding or anywhere else. So I think we're making up ground, but I think, there's so much friction in that really was, for a long time, hardwired into anyone's crypto experience, and it's all got to go away. So that's first thing. But like I said, I think there's lots of companies and lots of builders that are focusing on that and making headway really, really fast. I think generally the point that I would make to anyone trying to build something is, you got to understand how high the bar is. I mean, products these days work. The good ones work incredibly well. They're doing amazing things with design, with functionality, with technology behind the scenes. That's what you're up against. You're up against the tippity top in whatever you're doing. You're not up against anyone but that. And that should really be a forcing function for a founder to understand where the bar is. If you're saying, well, my app does this, but oh yeah, you got to do these 3 things, and that's not going to work. And I think over time, the bar gets higher and higher and higher because we all get better and better at this stuff. And, we just have to be realistic about that. And so, that's how we think about it. And hopefully we hold ourselves to a high enough bar that at the end of the day, when a consumer uses our app, it feels great.
I have one other shower thought here to get in that we haven't touched on. And it is that it's a little bit of history that Ben probably knows a hell of a lot better than I do. But I learned recently that the very first credit card, was something called Diners Club. And I think the founding story, Ben, you can fill me in where I'm wrong here, but I think the story is there's this guy who's like socialite guy in New York, and he used to host a lot of dinners out. And one night he hosted a big group and forgot his wallet, and he got really upset. And he was like, "I wish there were a way I could just pay without having to think about my wallet and carrying a bunch of cash on me." And so that was like the founding story of Diners Club, which was like the first kind of internationally accepted credit card. And then of course later, Visa got started. And I think the interesting thing about Visa is that, Visa was basically it was a consortium. I was going to say cooperative, but it was a consortium of a bunch of banks. And essentially the issuers of the cards own the network. So a little bit of just interesting history with a ton of overlap with what Blackbird's doing, both with, starting with restaurants as because everybody goes to restaurants. This is a great wedge in to build a credit card network. And then separately, the ownership model is something that there's also precedent for. If you want to go get a bunch of parties to cooperate on building a payments network, well, Visa did that and grew the network bigger, faster by giving everyone ownership in the underlying network. So I like this history because I think it's just some proof in the pudding, good precedent for Blackbird's success, and Blackbird's just doing it in the modern technology stack, mobile phones and blockchains.
We talk about Diners Club and Visa all the time.
Cool. So yeah, I just thought I'd mention that because it's for people listening, it's worth digging in on those two things. The history of Visa is really fascinating. The history of Diners Club is really fascinating. I think probably the history of Blackbird 10 years from now is also going to be equally fascinating.
Yeah, we hope so. I was not familiar with Diners Club as a Zoomer, so I'm going to be doing some Wikipedia rabbit hole time after this. But I think we'll end it there. Ben and Jesse, thank you guys so much for giving some time. Congrats on the Flynet launch and everything. It's been a really fun conversation.
Thanks, Jack.
Yeah.
Thanks for us.
Make sure everyone get your Digital Asset Summit tickets. That's coming up next month in March. It's going to be a great time. And also make sure to subscribe to the Lightspeed newsletter, written partly by yours truly. All right. Thanks, everyone. We'll see you in the next one.